Yo, what is going on, everybody? I appreciate you hopping on the call. What I'm going to go over today is something that has helped me take my trading to a whole nother level. I got to give it back to my man, my mentor, Christopher Derrick. He's the one who showed me the power of twin trading, which is what I'm going to be going over today, and how no matter what your trading style may be, how you could come in here, utilize the twin trading and take advantage of it to catch these big impulses in the market, whether it be to the upside, to the downside, whatever. This is going to help you maximize your profits, okay? So first things first, we're going to go ahead and we're going to draw the most previous high and the most previous low. All right, so right here will be the most previous high. We'll drag it out a little bit more. The most previous high, and down below will be the most previous low. All right, so just to let you know what I'm looking at. I'm looking at this high right here and this low down here, and I drew my zone into the future. Now, for those of you guys who know about trading, and what we're going to be waiting for is either a break to the upside or a break to the downside. So if it breaks to the downside, we're going to go ahead and wait for the retest, for the continuation down, or for the upside, wait for the break to the upside, come back, retest as the floor to the continuation for the upside. All right, so our entries are going to be either right here for the upside or right here for the downside. So I'm going to go ahead and play it, and we're going to see what happens, so then I can go into the twin trading aspect. All right, so once I go ahead and play it, almost breaks to the downside but faked out, and then we had a big impulse to the upside. Okay, so now we're just going to be patient and wait for the market to come back to our zone so we can look for our entry. And as you can see, the market is falling slowly but surely, making its way back down to our entry price. Okay, so oops, let me pause this for you guys. All right, so as you can see, it came perfectly right back down into our zone, so we could enter for the buy position. Now, to take full advantage of the twin trading aspect, first what you're going to do is you're going to enter 2 times at the same exact price. Okay, so let me make this green. All right, so we're going to enter 2 times right in our zone. Right, I'll make them 2 different colors so you guys can see. We'll make one green and one blue. Right, so let's say we entered twice right at that zone. Okay, well, what we do is, for me personally, I'm looking for a 30 pip take profit and a 20 to 30 pip stop loss. All right, so if we did our entry right there, and we went and did a 30 pip take profit with, let's do a 25, let's do right in between, a 25 stop loss. Okay, so almost a 1-to-1 ratio. Okay, but as you can see, when the market came back down into our entry price, this works so well because you're going to collect your 30 pips, and then you're going to enter, and then you're going to stay, not enter, you're going to stay in the market for a longer period of time. So what I mean by this is, so let's say the blue line right here is the one that we're setting our 30 pip take profit. So one trade, you set 30 pip take profit with a 25 pip stop loss. The other one, the green one, we're going to set a 25 pip stop loss, but no take profit level. Because what's going to happen is, as we go into profit, and let's say the blue one, the market came up and it hit our take profit. So that one is no longer there. Okay, so now all we have is this one trade that's currently up about 65 pips. Okay, and what we're going to do is, as soon as the first trade's take profit was hit, you're going to take the stop loss of the second trade and you're going to trail it. What I mean by that is you're going to take that stop loss and put it about a 10 to 15 pips in profit. Okay, so we're going to put it right there, about 15 pips in profit, and we're just going to sit back and let the market do its thing. We're not stressing about anything. We're not worried about if the market drops or goes the opposite direction, because we've already made our 30 pips, and now we also already have a 10 to 15 pip safety net that's already going to be in profit. But the reason why this technique is so powerful is because, yes, the market may drop to the downside, but what if it continues to go up to the upside? So let me play this and let's see what happens, okay? The market's doing its thing, and as you can see, it's consolidating. You're going up and down in profit, up and down in profit, but then eventually it starts to make higher highs and higher lows, showing you that the market is going to continue up in the upward movement. So as it continues to increase and your profit goes to get higher and higher, just simply take your stop loss and trail it. Move it up and up and up. We're going to move it about right there, and then let the market continue to do its thing. It may come back and hit our stop profit level, but it may just skyrocket like it did there. And if we let it skyrocket, as you can see, we would have been up about 280 pips. Okay, so we caught our 30 pips, right? But we also are up 280 pips. And then just continue to follow and trail your stop loss. We'll move it right about up here, collect another 100 pips in profit, and let the market do its thing. It may continue up, it may fall down to the downside and hit our stop profit level, but that's okay because we would have solidified our 130 pips in profit. All right, so let's check this out. Let's see what it does. Just in a lot of consolidation right now, but it's still making those higher highs, so we can continue to trail our stop loss. We'll move it up there, let the market do its thing. We're now up 220 pips plus. Let's see what it does. Let's see what it does. Guys, look at this. Oh, and here we are now. Guys, we went from a 30 pip move, right, to catching over 200 pips. So if you add our 200 pip movement plus the 30 pips that we already caught, you're looking at a 230 plus pip move, right? So instead of just taking profit at 30 pips, enter the trade twice. One take profit level at 30 pips. Same stop losses for both trades, but let them play out, let them do its thing, and you can maximize the trades that you have. But I'm going to leave it at that, guys. Much love. Talk to you soon.